This section deals with financial statements, and please note that you need to print the worksheets that's been uploaded on MindMorePark in order for you to deal with this section. So if you haven't printed them yet, please first go and do that and keep them handy, because we're actually going to refer to the information in the worksheet during this session. First, let's start off with terminology. It's quite important to understand the correct terminology to use, especially when we deal with financial statements, as these are documents that get published, especially if you're a public company, in terms of anyone accessing them, they need to see that you are using the correct terminology. So when we talk about an income statement, for example, you will see that we use the words income statement or statement of comprehensive income of the company. Let's take an example of Mars Services for a period ended, let's say, 28 February 2013. So the heading of the statement tells me what statement it is. So in this case, the statement of comprehensive income. The old words used to be income statement, and we can use them interchangeably. It tells me who the company is, so of Mars Services, and it tells me what period of operations this is the income statement for. So it's for the period ended 28 February 2013. A lot of times it will say for the year ended, if the financial period is a year, or for the 3 months ended, or whatever the financial period of the company is. Now, the income statement shows the results of the business operations during a financial period. So it will actually show us all the incomes and all the expenses that were incurred in order to arrive at either a net profit or a net loss at the end of the period. So it's quite important then that the terminology shows that it's for the period, it's for the whole period, for the whole year, or however long their financial period is. So all the activities that took place, all the incomes we received, all the expenses that we paid for that entire period is shown in this financial statement. Obviously, when we have to draft these statements, we will do so by using a trial balance, because the trial balance is simply a summary of all the general ledger accounts in the books of the business. The balance sheet shows the business's financial state on a certain day, because every day that picture will look differently. So it's really a snapshot or a picture, if you want, of what the situation is in the business on that specific day. And it's only valid really for that day. Because when you think of the elements of the balance sheet, the things that are included in the balance sheet, like assets and liabilities and owner's equity, any of those can change at any given moment. So if a debtor pays me tomorrow, then my debtor's amount is different. So my statement of financial position, or the old terminology was balance sheet, is only really true for that specific day on which it is drawn up, because the day thereafter, any of those elements could change and make the statement not a true reflection of the financial state of the business. Okay, so the terminology then in terms of the heading for the balance sheet will be statement of financial position or balance sheet of Mars Services, again showing us who the company is, and then either at or as at 28 February 2013. So it shows us at what date. Okay, so it's the what statement it is, statement of financial position of which company, of Mars Services, when, at or as at the 28th of February 2013. And that tells us that it's on that day it's valid, because that's the date on which we drew it up. So the balance sheet then, we said, includes all assets, liabilities, as well as owner's equity. And if you've watched some of the previous section on the accounting equation, for example, you'll know that owner's equity consists of incomes and expenses. So whatever net profit or loss I arrived at by using my incomes and expenses from the income statement, then acts as an inclusion on the balance sheet because it's shown as part of owner's equity. This then effectively means if you made a mistake calculating your net profit or loss and you transfer that amount to your balance sheet, then your balance sheet will also be incorrect and won't balance. Remember, the balance sheet had its old name because it said it had to balance the two sides, and it really shows the accounting equation in all its glory. In other words, assets on the one side and liabilities and owner's equity on the other side. So when we look at the format of the balance sheet just now, you'll see that those two sides stand out. All my assets are on one side and all my liabilities and owner's equity is on another side. Okay, so I've said that we typically use a trial balance to draft these statements with. And in the worksheet that has been uploaded on my Millpark, I've given you an example of a trial balance so that we can then work from that in order to draw up an income statement and balance sheet. And you have the formats as well. And I want you to have a really, really careful look at the formats then. So normally the first thing we do when we look at the trial balance is we decide on the classification of assets. So we look at the elements. In this case, there's capital, drawings, long-term loan, trade payables, land and buildings, vehicles, SARS, and a whole lot of others. For each of these, we have to go and classify what they are. It just makes it easier when we then have to do the entries into the financial statements to decide where to put them. Okay, so let's go down the list and classify each of those accounts in terms of the elements of the accounting equation. Capital. Capital is seen as owner's equity. Drawings is also seen as owner's equity, but remember that it's a contra account because it reduces the value of capital, and that's why I've put it in brackets so that you can remember that it's an amount that must be deducted from owner's equity. Long-term loan is a liability, and specifically it's a non-current liability. It now becomes important to use the sub-classifications because when you draw up the statements, you're not only going to show the items as liabilities, for example, but you're going to further classify them into current and non-current liabilities. Again, if you haven't watched the section on classification of accounts, please do so, because then you can just revise all of these terminologies again. Okay, trade payables is the same as my creditors or accounts payable. It's money that I owe, so it's a liability, and it's specifically a current liability because I will normally have to pay that within 1 year. Land and buildings is an asset, and specifically a fixed or a non-current asset. The same with vehicles. Vehicles is also an asset, and specifically it's a non-current or a fixed asset. SARS. Now this is an interesting one. SARS is the tax that I owe the South African Revenue Service, and because it's tax I owe and I haven't paid it yet, I then have to see it as a liability, and specifically it's a liability, it's a current liability because I would have to pay it within 1 year, because remember we pay tax annually. Then accumulated depreciation is seen as a contra asset, which means that it's going to reduce the value of my asset. In this case it will be vehicles. The accumulated depreciation will reduce the value of vehicles. Inventory is an asset, I own it, and it's specifically a current asset because I can very quickly sell the inventory and get the money in cash for it. Trade receivable, or the other name would be accounts receivable, or the debtors, is an asset, specifically a current asset because people will need to pay me within a year. And bank, because it's got a debit balance, it means that it's got a favorable balance, which means I actually have money in the bank, and therefore it's an asset, and specifically a current asset because it's obviously liquid. I have the money available and I can use it at any time. Remember, if bank had a credit balance here, then it would have been a bank overdraft. They don't always put the word overdraft in because they want to see whether you know that if it has a credit balance, it's actually money you owe the bank. You don't have the money available, and therefore it would then be a current liability, not a current asset. Okay, the second part of the trial balance contains a few more items. Let's have a look at them individually. Firstly, revenue. Revenue is the same as sales, and that's my income that I receive in the company. Then cost of sales, what I pay in order to be able to sell the goods. That's an expense, and that's my two biggest incomes and expenses in the company. Then rent income, as the word says, it could have also said rent received. That would be seen as an income. Advertising is an expense. It's something I pay in order to promote my business. Repairs and maintenance is an expense. Salaries and wages, which I pay to my staff, is an expense. Depreciation is an expense. Remember, we've now dealt with depreciation in a separate section again as well. So if you're not quite sure about depreciation, please go and watch the section on specifically depreciation. Administration charges is an expense. It's something you pay monthly. Interest on loan is an expense. You also pay that monthly or at least once a year. Commission received is an income because it's money I receive, and you'll see it's in the credit column, so that tells me that it's an income. And insurance expense or insurance paid is an expense as well. So now I've classified all the items in my trial balance, and from there it should then be easy for me to go and just plug in these accounts in the different statements where they belong. So let's just quickly recap. Income statement consists of incomes and expenses. So all of these items that you see on this slide, from revenue right down to insurance expenses, these items will all appear in my income statement, and all of these items that I did in the previous slide, from capital right through to bank at the bottom, all of those items will go to the balance sheet because they're all owner's equity liabilities or assets. Also remembering that the result of this, in other words, the result of the income statement, the profit or loss that I make, will also be included in the balance sheet under owner's equity. Okay, so with that in mind, let's then have a look at what the income statement is going to look like. You will see that the format, in other words, the items that needs to be there regardless of what information is given to you, is in black. And any information related items are in red. In other words, if you have a look at the worksheet I gave you, whatever is typed in black there is the layout that your income statement should have, regardless of what information gets given. In other words, it must have a heading. It must say statement of comprehensive income of the company, in this case Samsung Traders, and for which period, for the year ended 28 February 2012. It then has to start with sales or revenue, and from that we're going to deduct our cost of sales amount to get our gross profit. To gross profit, we're going to add any other incomes that we have had in the year to give us a gross income. And from that amount, we're going to subtract any operating expenses we had in the year to get to a net profit or loss for the year. So it's quite important that you at least understand the basic layout of the income statement and what elements has to be there regardless of which trial balance gets given to you. Those elements have to be there. They have to be shown in that form, and all you then need to do is to add in all the other little bits. All the red bits is what we then get from the trial balance. Okay, so what we need to do is to go and see what other incomes we have. And if you look at the slide with all the incomes and expenses on them, that would then be commission received and rent income. Similarly, under operating expenses, I want to list all the other expenses I had, which is not cost of sales, obviously, because I had that at the top. So again, if I look at the bottom part of my trial balance, at all the elements that was classified as expenses, you'll see that that was advertising, repairs and maintenance, salaries and wages, depreciation, administration charges, insurance expense, and interest on loan. So you can see that by taking the trial balance and classifying the accounts before you actually start with the income statement and balance sheet, it makes it so much easier for you to decide what are expenses, what are incomes, and where must they be written in on my templates or on my formats. Okay, so the next thing that we have to then do is to simply go and plug in the amounts. Now you'll see that even though there's not columns drawn, there's two sets of columns in the income statement. You can do it in one, but a lot of times we actually do it in two because the subsections get shown on the left-hand side and only the totals get shown on the right-hand side. So, for example, wherever you have something in black, you will see that that amount is shown on the right-hand side. And everywhere where you have something written in red, you will have the amount for it on the left-hand side. That is just so that we know that when something changes or when there's different incomes or expenses, we list them separately and only the total gets carried to the right-hand side column. So on the right-hand side column, I really only deal with the basic format of the income statement. So all the elements that are there regardless of what information I receive in my trial balance. Okay, so from the trial balance then, if I put in the amounts, I see that my revenue is 500,000 and my cost of sales is 160,000. Remember that I need to deduct cost of sales from revenue in order to get my gross profit, because sales minus cost of sales equals gross profit. So 500,000 minus 160,000 equals 340,000. Then I want to go and add all my other incomes together. So I've got commission received of 1,800 Rand and I've got rent income of 8,700 Rand. If I add those two together, I get an amount of 10,500 Rand. That gets added to my gross profit to give me a gross income of 350,500. From that gross income, I'm then going to deduct my operating expenses. So let's go and have a look at what the operating expenses were. Advertising was 10,200. Repairs and maintenance was 20,200. Salaries and wages was 88,000. Depreciation was 12,100. Administration charges were 18,000. Insurance expense was 8,000. And interest on loan was 2,000. So if I add all of those amounts together, I get a total of 158,500 Rand. And it's shown in brackets on the right-hand side because I'm going to deduct it from my gross income. And the amount I'm left with, the 192,000, is my net profit for the year. If that amount was a negative amount, it would have been a net loss. And that's why the loss is shown in brackets in my heading, because in my format, I won't know whether I made a profit or a loss until I actually fill in the amounts. So when you write out your format, you will just write net profit, loss in brackets for the year until you've actually got into it. You can then, if you want to, just scratch out the loss, or you can just leave it like that, because if there's no brackets around the amount at the end, then we know it's a profit and not a loss. Okay, so that's the bones of the income statement. Again, really easy if you've already classified all the items in your trial balance, and then you just need to go and plug them in. So what's important here is to understand the bones of the income statement, in other words, everything that's typed in black and that you have on your worksheet. Anything additional is what you get from your trial balance, and that will differ from question to question, but the basics will stay exactly the same. Okay, let's have a look at the balance sheet. So the balance sheet consists of assets, liabilities, and owner's equity. And we've said that it reflects my accounting equation. In other words, the assets added together must equal on the one side all the liabilities and equity that I have on the other side. So I've got two sides, and both of these will have a certain structure. My assets, we've already divided into non-current assets and current assets. Please, again, if you have not seen the section on classification of assets, do that, because there we talk about the differences between the two types of assets and the differences between the two types of liabilities as well, and what equity consists of. So under assets, I have non-current assets and I have current assets. And then the same under liabilities. I have non-current liabilities and current liabilities. And then I also have equity or capital. And those two together then form the right-hand side of my equation. So let's then go and have a look at the trial balance, the first part or the first top half of the trial balance. Because what we've done with the classification is we've already said where each of those items need to go. Now again, if you look at your worksheet, everything that's typed in black is the format of the balance sheet, and anything that's in red on my slide is more information that I get from my trial balance. So these will differ from one question to the next, but the layout and the format of the balance sheet will stay the same. So I've got a heading for the balance sheet that says Statement of Financial Position of Samsung Traders at 29 February 2012. Remember that a balance sheet is done on a specific day, so the heading says at that day because it's only valid for that day. Then on the left-hand side, you'll see that I've typed in the main areas, in other words, assets, and we subdivided them into non-current or fixed assets and current assets to give us a total assets, and that's the left-hand side of the accounting equation. And then on the right-hand side of the accounting equation, I have owner's equity and liabilities. First I show the equity part, and then I show the liabilities part. And again, liabilities can be divided into non-current liabilities and current liabilities. And that will give us a total equity and liabilities, which shows me the right-hand side of the accounting equation. So really easy if you remember what the accounting equation looks like, then to draw up the balance sheet, and just then to remember what the subcategories are of each of these items. Okay, so let's start at the top, assets. Assets, we said, consists of non-current assets and current assets. So if I look at my trial balance, what did I classify as non-current assets or fixed assets? There were only two. There was land and buildings, and there was vehicles. Under current assets, I have three. I have inventory, or my stock. I have trade and other receivables, in other words, my debtors. And then I have cash and cash equivalents, which in this case includes my bank. So you'll see that those terminology is slightly different to the ones that you get in the trial balance. You can use exactly the same as the ones that are given in the trial balance. What I've tried to do here is to use the new terminology that is used in accounting practice, because it includes a little bit more than just the accounts that we're used to working with. But it will be quite okay if you just say inventory, trade receivables or debtors, and bank in this case as well. Okay, if we look at the amounts while we're busy with it, land and buildings was given as 210,000. This is obviously the cost price of the buildings. Vehicles, a little bit different because remember we also have accumulated depreciation, which is a contra asset. Now we can show this in one of two ways. In this format, all we do is we show the cost price minus accumulated depreciation, where we write vehicles. So we show vehicles and in brackets 180,000 minus 25,000, which is the accumulated depreciation. And then I just put the total in the left-hand side column, in other words, 155,000. I could have also, if I had more than one asset here to show, I could have had separate columns for that as well, but this is sufficient. Under current assets, inventory is 76,000, trade receivables is 70,000, and my bank amount was 80,000. Okay, so each of those, again, you'll see the two columns where the totals of the items that were typed in black is shown on the right-hand side, and only the subcategories are shown in the left-hand side column, or the red. So land and buildings and vehicles, if I add those two together, 210,000 plus 155,000, I get a total for non-current assets of 365,000. The same for current assets. If I add the inventory, the trade receivables, and the bank together, 76,000, the 70,000, and the 80,000. If I add those three together, then I get a total of 226,000 for current assets. Those two together form my total assets and gives me a total of 591,000. So that is the left-hand side of my equation, of my accounting equation. Let's have a look at the other side quickly, the equity and liabilities. Equity, we decided long ago already, consists of three things. It consists of capital minus drawings plus net profit. Net profit also sometimes called retained income. So if I look at my trial balance, my capital amount is given as 215,000, but they also give me drawings of 15,000. Remembering that drawings is a contra account, so it decreases my capital or my equity. And in this case, it can be shown separately, but it can also be shown as it does in this slide, simply by showing what you deduct. Please show that, though, and don't only put the 200,000 in, but show us next to capital that you've deducted the 15,000 drawings from the original capital amount of 215,000. So actually, the capital contribution at the moment by the owner is only worth 200,000 rand. Then retained income or net profit, that is the amount that you got from your income statement. In other words, that was the result of your incomes minus your expenses. If I just go back to the previous slide quickly, you'll see at the bottom, net profit for the year was 192,000. So that is the retained income amount. That's where we get it from. And the capital plus the retained income, because the net profit belongs to the owners, that together forms my equity amount of 392,000. So again, you'll see the totals are on the right-hand side and all the subcategories are on the left-hand side. Okay, liabilities. Liabilities consist of non-current and current. The only non-current liability I have there is the long-term loan of 104,000 as per my trial balance. So in this case, I didn't really need to use the columns, but I find that it's easier to understand if I fill everything in and then carry the totals to the right-hand side, so you could choose to do the same. Current liabilities, we have trade payables of 70,000 rand, in other words, creditors. And we have the SARS, the tax that needs to be paid of 25,000 rand as well. So both of those are current liabilities, and if I add them together, it gives me 95,000. And if I then add the equity of 392,000 together with the liabilities, the non-current of 104,000 and the current of 95,000, those three together gives me a total of 591,000, which is the total for equity and liabilities. And if you now compare that to the total for total assets, you'll see that it's exactly the same. which means that my left-hand side equals my right-hand side of my accounting equation, and my balance sheet balances. So all the amounts were written in the correct place. So at the end of the day, you really can't make a mistake in the balance sheet, because it will show by not having the two sides equal to each other. If you find that your balance sheet doesn't balance, I will suggest firstly to go and check your income statement again to make sure that all your incomes and expenses were correct, and that your net profit or the net loss that you transferred into the balance sheet was correct. And then further, just to make sure that you've classified correctly between assets and liabilities, that you maybe haven't inadvertently swapped things in order for you to get your balance sheet to actually balance.